Good morning, good afternoon, and thank you all for joining us today. I'm Pranati Dave, and again, pleased to welcome you on behalf of Everest Group to this very timely discussion on what are these five forces shaping the technology and tech services landscape for banking, financial services, and insurance. So, again, these are not just trends we are tracking, we represent real shifts in how financial services firms are going to operate, engage, and grow. Whether we are sort of thinking about navigating modernization, or the evolving risk spectrum, rethinking the services delivery, these forces are sort of reshaping the priorities across the industry. Our goal today is going to be very simple: to help you make sense of what's changing, where the real opportunities lie, and how banks, financial services firm, and insurers can respond with clarity and intent. Kriti, Dinesh, and I will begin by unpacking these five forces we believe are setting the pace. Then we'll translate those into insights, what this means for enterprise decision making. And of course, we'll leave time during the course of today's discussion for your questions. With that, let's dive in. Again, we are witnessing a fundamentally reshaping of how financial services and insurance enterprises engage with technology and services, driven by these five mega forces. They are not just accelerating the change but redefining the operating model itself. What used to be disruption is now sort of the norm. So volatility we've seen across economic, geopolitical, and regulatory spectrum is also pushing spend away from run and protect and more towards change the business. This is opening space for real reinvention, especially in areas such as code modernization, technology, and infrastructure. But with that comes pressure. Banks and financial services and insurance firms, they're becoming more and more aggressive. Price sensitivity is rising, and at the moment what we see is there is a lot of focus on outcomes, fueling rebids, a lot of portfolio consolidation, and tighter commercial models itself. AI sits at the heart of this shift. So what we are seeing is no longer pilot level activity. Uh, Generative AI or agentic AI is now embedded in live functions. Be it claims that Dinesh and I were discussing, or KYC, or AML triage, loan operations. Again, the focus is on tangible results. This is precisely what at the moment our broader team, is helping some of the larger financial services into some of our larger financial services clients addressed. With millions of dollars baked into IT operation and tech spend, they have asked us to completely reimagine their RFI processes through an AI first lens. Again, we are working with them to choose between three paths. Do they evolve? How do they reinvent? Or do they maintain that status quo? Their conviction and ours is that the market is nearing an inflection point. The firms that will not, will that will lead will not be those who add AI to traditional sourcing models or structures, but those who sort of re-architect around intelligence first, outcome linked delivery. And this isn't just about selling AI. This is going to be, how do you enable transformation through AI across the full life cycle of technology and technology services? That's forcing both our buyers and providers to rethink some of these engagement models and you know offer shared accountability. And finally, we are seeing the early signs of real convergence between tech and operations. AI and automation are not just going to be tools; they are becoming that connective tissue that's going to unite our business processes, our data, and decisions. We are working with enterprises, building a lot of these, taking the lens of product first operating model, compliance, and operation work as fuse teams, and not just handoff points. Um, Again, let me pivot to Dinesh and Kriti over here. From both of your vantage point, which one do you think would make most sense here? Dinesh, let me ask you first.
No, sure, Pranati. So, Pranati, I think I'd say despite the hype that we have seen over the last 2 to 3 years around AI, I think the overall BFSI industry is still underestimating the disruptive power that AI has, right? So, and this is not just as a productivity lever, but also as a mega force that we're talking about today. That's rewriting how value is being delivered, right? So from my vantage point, I think we are just only scratching the surface of what AI-led reinvention can do for the BFSI industry. So it's not just about the tools that you're using, but essentially about reimagining the overall architecture of how works gets done and how the value is getting measured, right? So Pranati, in a nutshell, my bet would be on the third mega trend that we have outlined here, which is an AI-led operating model. Yeah.
Yeah, Kriti, I think Dinesh covered his perspective very well. Do you have any additional perspective to layer in?
Yeah, sure, Pranati. So I think there are two that come to my mind. Honestly, I believe and I think that the market is still underestimating the convergence of tech and ops. So everyone is talking about AI, right? We will be also, touching upon this in today's discussion. But very few are actually re-architecting their operating models to actually use it end to end, right? It's similar to buying a Ferrari and then only driving it in the first gear, right? So that power we are still not exploiting to the fullest. Also the based buying piece is interesting here, right? So everyone loves to talk about outcomes, but when the RFP really hits the table, right, we still default to rate cards and head counts and other such parameters, and that is the shift that we should definitely push for in the industry.
Yeah. Again, this is helpful and very interesting take. Let's keep us going. Over the last 8 quarters or so, we've seen, Dinesh will have to shift. Yeah, thank you. We've seen the enterprise technology spend move through a very clear cycle from caution to stabilization to, selective reinvestment as what we're seeing. So again, this chart shows that underlying confidence curve of enterprises. Again, if we go back to 23, BFSI was among the segments that cut, spend sharply, as there was a lot of focus on, margin defense, delayed discretionary programs, pushed out some of these multi-year transformation bets as well. But again, the trough around quarter four of 23 or, quarter one of 24, that reflects that bottoming out. What we see is at the moment very encouraging, sustained recovery that has followed. Um, and again, in our conversation with several of banking financial services CXOs, the tone has shifted. They're not just asking about how do we reduce costs, they're asking how do we use technology to build that agility, reduce the risk, and drive that kind of growth. And this shift in the enterprise mindset is what's driving this divergence. So industries that remain cautious, such as, you see here, manufacturing, retail, they're still, seeing that flat, sort of a supplier performance. But banking financial services and insurance is sort of leaning in, as we'll explore today. That means new sourcing priorities, new pricing expectations, and a very different approach to partner engagement in a very, in an AI first world. uh, Quickly keeping us going, again, as we sort of zoom into the latest data, in terms of the market, again, there's a sustained momentum that you see here as we move into 2026. Again, this is significant. It signals that we are moving from that episodic recovery to that baseline reinvestment of sorts, that's being driven by a lot of enterprise conviction. And these are not just market tailwinds. So again, institutions are rebalancing towards change the business trend. I think we'll talk about this in detail. Kriti and Dinesh will both share their perspectives. There is a huge focus on modernization, AI-led operations, and platform consolidation across some of our conversations. In our work, we've also seen increased demand in areas such as agentic AI orchestration, data foundation, data governance. Also, the entire apps and operations story, that's also emerging at a very fast pace, keeping us going. Again, as we shift gears here, Let's take a very quick pause and hear from all of you. We've talked about recovery, reinvention, AI first sourcing. But as we look ahead into 2026, what we want to know is, where is your organization placing its biggest bet? Is it about running the business better? Is it about changing the business faster? Or you're just, protecting business smarter? Again, take a moment to vote. We'll pull up the results shortly. And yeah, while the responses are coming in, Kriti, let me put you in a spot. What's your hypothesis here? Do you think the room will lean towards transformation, or we are still, in that cost and control mode for 2026? I think you were alluding to the rate cut fact, but yeah, what's your perspective? What's your guess?
Yeah. No, Pranati, I believe we are in the cost and control mode for so long that transformation is starting to sound like a luxury for some. But in reality, I believe that it is actually, survival for us. So my bet, I believe the room is going to lean towards change, because I believe that you can't cut your way to growth forever, right? At some point, you'll have to build again, you'll have to bring it that change and the wave of modernization. So yeah. I would lean towards change.
Yeah. So Kriti, you're leaning towards change. I think the results are out now. Uh, Quickly, so run the business and change the business are almost at, sort of loggerheads, as we see here. 36% of our audience has voted for run the business. So 41% for change, and protect the business is 23% is what we see here. Yeah. Quickly keeping us going. Um, Again, we've discussed the crisis as usual sort of a mindset and how it's forcing our financial services and insurance enterprises to rethink how they allocate budgets. What's clear is that run and protect are sort of under pressure, and budgets are tight. Scrutiny is high, and again, any spending here must show very visible cost efficiency or risk reduction. But that also means one thing, and we saw that in our poll as well. The change agenda becomes the lever for relevance and growth. This is where institutions are also doubling down on, because let's be honest, we are not going back into the work of predictability. If anything, volatility is going to be the new normal, and waiting for things to settle before investing in transformation is no longer going to be viable. Transformation has to happen through uncertainty, not after it. And we are urging clients, you continue to spend when it, where it matters, when and where it matters, on innovation, on agility, on infusing, intelligence into operations. Kriti, let me bring you in. Across your conversations with banking and cap market firms, where are you seeing the strongest momentum behind change? Is it more around digital product launches, customer experience reinvention, anything on core, your perspectives?
Sure. Yeah. So when we talk about, changing the business in banking and capital markets, and what's truly exciting me as, part of my discussions with clients is how product innovation and experience design are being reimagined. So we are seeing our clients experiment with things such as, tokenized assets, stable coins, and even quantum safe cryptography. And that's not just modernization, I believe, right? As you were mentioning, it's a complete redefinition of trust, innovation, and security into the investment products, right? The same goes for the payments space as well, right? So we are now entering the era, which I would like to call it the agentic era of payments, wherein, payments are not just triggered by people, but, by intelligent systems acting on their behalf. So just imagine a scenario wherein event-based, autonomous payments are running quietly in the background, and they are, deeply embedded in our journeys and in the customer journeys, right? On the commercial banking side, also the shift is, I believe, equally powerful. We are, moving from selling discrete products to becoming actually platform driven, wherein these commercial banks are offering embedded finance solutions, and this is also integrated across supply chains, trade flows, and treasury, right? So what I believe is that the real story here is not just about technology and change. It's actually about reinventing the product layer in order to deliver new experiences and business models. Would also like to call out and alluding to the same point that you mentioned, that in this environment every dollar is being scrutinized. Hence, the differentiator here will be how fast organizations can turn these innovations into measurable ROI, right? And that's where we are also helping our clients around powerful, prioritization frameworks, which we believe are going to truly separate, the leaders from the followers in 2026.
Yeah, that's really interesting, and I agree with quite a few points that you made. Dinesh, from your perspective, are insurers using change the business initiatives to also reframe some of these commercial models? How are you seeing that, in that segment?
Yeah, absolutely, absolutely, Pranati. So I think there's this general perception in the market, right, that usually insurers are slow to kind of adapt to whatever happening in the world. Let's say today's AI world, but I think that's definitely changing. We do see a lot of change in the market and a lot of appetite for some of that change the business agenda, right? So I can talk about from an insurance perspective, right? So I think we are seeing a lot of demand and a lot of investments in areas such as digital customer experience. I think as customer preferences are evolving in the market, we are seeing a lot of investments from a customer experience perspective. Also, again, insurance being a traditionally very legacy heavy industry, we are seeing also a lot of investment for platform modernization kind of initiatives. And again, from a process perspective, from a value operating model perspective, a lot of activity happening, I would say, on the underwriting and claims front, which are the critical insurance processes, right? So I think a lot of change is happening. Now, to your question around, linking this to some of those transformation outcomes. So yes, definitely a change. We're starting to see a change happening on that front as well. We are seeing, an evolution in terms of how success is being measured. So, instead of the typical effort-based matrices like per policy models or the FT-based models, we are seeing some of those conversations evolving to more of an outcome link model. So, from an insurance perspective, it could be about improving the insurer's loss ratios, reducing the overall claims leakages. From a claims perspective, again, it could be just improving the overall claims turnaround times. I think some of those conversations are starting to happen, right? And we do see a change, a big shift happening in the market from an insurance perspective as well.
Yeah, thanks, Dinesh. Thanks, Kriti, for for covering the entire spectrum. Moving on again, despite the volatility, we've seen financial services enterprises, they're clearly doubling down on their tech investments, across the board, across different markets. So what's fueling this? There's a lot of focus on AI enablement, customer transformation, a lot of these themes that Kriti and Dinesh both alluded to in their in their perspectives as well. Cybersecurity is the other area, and again, core modernization. So again, the message is very clear. Transformation isn't optional. It's sort of funded by that intent, especially around a lot of the AI focused investments that are happening across the financial services spectrum. Keeping us moving, again, what we've seen here is that budgets haven't grown significantly, but your tech investments absolutely have. So again, what we are, is this looks like a very classical squeeze where enterprises are channeling more into AI, cloud, SaaS. But again, because the ROI on these best bets is in near term, they're cutting deeper into some of their services trend around consulting, integration, operations. Again, not just to fund these initiatives, but to extract the right kind of value from them. The challenge is without adequate investment in the AIO stack, even the most ambitious of tech programs risk stalling at scale. Kriti, it feels like everyone's doubling down on tech, but the budget pie isn't getting any bigger. So are sort of RFPs and pricing wars the market's way of saying show me the value? What are your
Uh,
perspectives?
yeah, no, I absolutely agree to that. Value realization from technology investments has, really become the need of the hour. And, with that, we can discuss the next mega force, which is, around heightened RFP activity as well as pricing wars in the market. And This significant surge is because enterprises now look to ensure that their technology investments are actually translating into measurable outcomes, right? And it's not just about value realization. This also I wanted to call out. Consolidation, cost takeout are also, major themes behind this heightened RFP, volume in the market. And consolidation is being, driven partly by, of course, the cost pressures that these enterprises are facing and, the efficiency goals they are establishing for themselves, but also because of this rise in the GCC setups, right? We have seen, and we have so many examples, and a lot of our clients are also setting up, these massive GCCs. And as this happens, more and more work, moves in-house. But at the same time, enterprises want to retain their marquee client status with service providers as well as favorable pricing. And to do that, they definitely need to offer volume, right? They can't do this without the economies of scale that is required, right? So there are so many deal situations wherein, we are also supporting, wherein, BFS enterprises who have a sprawl of service providers are, consolidating these 10, 12, 15 non-preferred providers to 2 to 3 preferred providers, because that, drives the volume for them, the economies of scale, and then, gets enterprises the right attention that they want from their suppliers. On the other side, if we look at, suppliers, they are under intense, investor pressure, and, that's evident from the recent stock performances that we have been tracking as a practice. So it's a tough and competitive market, and we are, definitely seeing that kind of a desperation play out through pricing wars, right? In many deals, price reductions of, 25% or more were happening within a single, deal life cycle. And these discounts were not just, AI-led productivity gains, because as we, we were doing the deals analysis, we were also seeing financial engineering, evolved pyramid structures, and, the entire reshoring being, used to make these commercial models work. So, and also to put into perspective, right, we recently saw a traditionally premium consulting heritage provider undercut the market norms for a European bank, in an application development deal with rates which were falling below the 20th percentile of market benchmarks, right? That kind of an aggression is what we are, seeing in the market. So overall, it's a market that is clearly under margin pressure, and where, both enterprises as well as providers are rethinking, commercial models and chasing for faster ROI. But would also like to highlight that beyond pricing and productivity, there's a bigger lever to play, and we have been talking about it, which is, AI-led reinvention. So maybe if I can, bring Dinesh in and, ask him that how do you see AI reshaping the industry's approach, to transformation and this kind of a value creation?
Yeah, absolutely. Great question, Kriti. So I think I briefly talked about it earlier, but I think AI is fundamentally redefining how value is getting created. As I said, right, the overall BFSI industry is shifting from that traditional labor arbitrage kind of a model to a more of an AI first model, and that is exactly what we are going to cover in the next few minutes, right? So as we look at this AI adoption, right, I believe that the BFSI industry is at an inflection point right now, and we are seeing three scenarios playing out as we look into the future, right? So the first scenario is more of a traditional scenario, which is enterprises, BFSI enterprises maintaining the status quo, continuing to depending on the traditional labor arbitrage kind of a model with very limited AI initiatives, right? So that's the traditional scenario. The second scenario is more from an evolution perspective. So we are calling it the evolution scenario. So this is where the AI and the labor arbitrage models coexist in a hybrid kind of a model. Enterprises typically will use AI to augment the service delivery, to increase productivity and smaller impacts, right? So that's the evolution scenario. But I think the main important point here and something that we wanted to spend time on is the reinvention scenario as we've been talking about it. And this is also where we as an analyst group get very excited about, right? This is about how we fundamentally rethink the ways of working, right? And the impact on the buying process of services, right? So how do we think beyond the silos approach and think of categories that spans across different segments across BFSI to be able to drive this AI first model, I believe that's the reinvention scenario that we talk about, right? So essentially, three approaches that we see going into the future, right? Now we look at, if we look at the exact or the the real adoption of these different scenarios. So as we think about most of the BFSI industry, as we look at most of the BFSI enterprises, right? We believe that most of the enterprises are currently at that intersection of the traditional and the evolution scenario that I talked about. This is the point where they're bringing in some of those agentic AI infusion in their traditional services. But I think the selling model still remains a labor arbitrage or a TNM kind of a model, right? Very few are moving into that intersection of the evolution and the reinvention scenario. We believe that this will require a different kind of a DNA, right? When it comes to rethinking about your entire service delivery model, not just through people, but a combination of technology and people. So these are the areas where you're thinking of services being delivered and measured by the business value that they create, rather than the kind of FTs which you put on certain processes and function, right? We believe that this would require significant amount of change in the buying process, in the delivery process, as well as in the talent model to be able to deliver some of these outcomes, right? So this is why we believe that reinvention is fundamentally very important to drive this overall AI adoption, right? So now, while we talk about some of these uh, approaches in the from a perspective of evolution to reinvention spectrum, I think what is also important is to just understand that not every organization will move at the same pace or in the same way. Each BFSI firm will chart its own path along that spectrum that we just talked about, based on the kind of digital maturity that they have, the kind of risk appetite that they have, and some contextualization in terms of the kind of processes that they have and what is the state of maturity of these processes, right? So we believe that what really matters is to intentionally design their journey. This involves identifying which function to modernize first, where to apply AI augmentation, and how to also look at some of those governance related aspects, right? So we believe that the real challenge and opportunities lies in making the transition deliberate and measurable. uh, I think at this point, I'd also ask Kriti to maybe come in and share her thoughts in terms of, how she's thinking about this overall space, and particularly from when we think about AI augmentation, and, just talk about her experiences and based on her conversation with some of the BFSI firms. Yeah.
Yeah. No, of course, Dinesh, I can do that. But definitely, want to go back to the point that you made around, enterprises are going to chart their own paths on this journey. But definitely, here's the catch which I want to discuss, with the audience on the discussion today, is that your sourcing approach has to evolve with where you are on that curve, right? So if you're still structuring RFPs the old way, which is, focused on rate cards, TNM models, and legacy KPIs, your solutions will stay old, right? That's a fact. That's where this concept of moving to AI aware, to AI augmented, and eventually to AI multiplier pods that we have been talking about a lot as an organization becomes so important, right? So just a deep dive on what exactly do I mean by these is that if you think about AI aware as teams, these are people who use AI tools occasionally. They understand it, but they don't live it, right? AI augmented teams, on the other hand, use AI every day to improve efficiency and quality, but the underlying process, still looks similar. The real leap, in my opinion, happens at the AI multiplier stage, wherein teams become orchestrators of multiple AI systems, right? So combining co-pilots, autonomous agents, and enterprise-specific AI ecosystem to actually transform the way particular work or a process gets done, right? And of course, going back to the point that Dinesh already highlighted, that at to get to that stage, enterprises really need to rethink on how they write RFPs, right? The questions they ask today will determine the quality of the solutions they will receive tomorrow, right? So if you don't ask for, say, AI enabled models, you will, not end up getting those transformative outcomes. And if you really look at our work also with clients today, it's, really about helping them rethink their RFPs, evolve the questions, and reshape how they, actually assess supplier solutions so that they can, confidently move along this AI journey. So, Dinesh, why don't you talk about some of these RFP design elements, right, in the evolution and reinvention scenario, because that will really make things real for us.
Yeah, absolutely. And thanks for sharing your inputs, Kriti, right? So I think we talked about the evolution, reinvention, shift in the market. We said, right, that we believe that this shift has real implications on how sourcing is done. And I think Kriti also alluded to some of those aspects. So I think what we believe is that, the traditional RFPs and the way the traditional RFP method operates, that is going to drastically change as we looked at that evolution and reinvention scenario. And what we also think is that, if the RFPs don't evolve, the supply solutions won't evolve either, right? So that's why I think we are helping our BFSI clients also to rethink their sourcing questions, redesigning RFPs to demand, AI augmented solutions and more of outcome linked delivery constructs, right? So as a result, what we are also seeing is that, from the supply perspective, suppliers are also starting to now articulate how, some of these AI first pods, some of these automation and human AI collaboration, how can they deliver measurable process outcomes for their BFSI clients. So right, so we are seeing that shift happening from the supplier side as well. And I think if you look at this page, right, we have given an example of how the application development process is going to evolve both from a evolution and reinvention scenario and how that could play out. So while this page talks about the evolution scenario, what we have on the next page is the reinvent scenario, right? So taking the example of the application development process, what we are seeing is that, in that reinvent scenario, the RFPs will definitely have to, there has to be a drastic change in terms of how some of these things are designed, right? So it basically involves asking the suppliers to abandon the traditional labor constructs and propose in their RFP, the RFP answers in terms of how are they proposing and looking at some of these AI augmented solutions, some of these pods that I think what is more important also the accountability part of it, right? So you define the outcomes and you're also held accountable to deliver on some of those outcomes. I think that is really becoming important. Now, as we talk about some of these things, right, I think we understand that, not all BFSI enterprises can, immediately make that leap, right? The leap from, let's say, a traditional to a evolution to, the ideal, the reinvention scenario, right? But I think the key message that we wanted to drive, via this conversation as well is also that, in the next 12 to 18 months, I think that also gives you a good window of opportunity to, let's say, learn and experiment and just formalizing the shift from a traditional to a evolution or reinvention kind of scenario, right? So when you also look at some of your, sourcing events, right, it is very essential to kind of review your upcoming RFPs with this evolution and reinvention lens, ensuring that, some of these things are structured to drive evolution and prepare for reinvention. And just to support you with that, we are also offering a complimentary review of your upcoming sourcing events. And the idea is that, where we will provide you with tailored feedback on how to think about some of these, evolution and reinvention scenarios and how to embed those in your AI-led outsourcing constructs and outcome linked commercial model. So what I would encourage to, do is, just take advantage of this, and you can also click in the link that, that is being shared in the chat to register and just sign up for a complimentary call where we will, talk about some of these things in terms of how to embed some of these things as part of your, overall RFP processes, right? I think as we talked about this, whole reinvention scenario, we talked about the AI adoption and how to move towards that AI first operating model. I think this whole conversation also raises an important questions, right? Which is how are we, or how do we actually think about translating some of these capabilities into tangible outcome linked value? and the kind of impact it will have on the overall supplier mix, right, for for the BFSI enterprises. So I think that question is also something that we should consider. And I think to answer that, Kriti, why don't you take us through some of your thinking and in this space, and how we are thinking based on our conversation with some of our BFSI clients.
Yeah, definitely. I think we have been talking quite a bit about, changes in the supplier mix, consolidation, diversification, and, all the fun that comes with it. But
Yeah.
now we definitely would love to hear, from our audience as well, through another poll question that, are you sticking with your current providers, or in, 2026 is the year, of a little portfolio rebalancing for you? So I believe the question is already there on your screens, and while we get the answers and the final results show up, Pranati, just checking on you, where do you think the industry is leaning? Are enterprises finally ready to simplify and go deep with a few, or are we still experimenting and adding more partners to the mix?
That's an interesting man. You really put me in a spot. But I think we very clearly are seeing signs where at least banking, financial services, and insurance enterprises are moving towards a more leaner partner structure. So again, consolidating a number of these relationships. And the rationale that I have is that there's a huge focus on a need to drive more accountability, integrated value delivery and cost efficiency. So again, the consolidation is also happening with more strategic partners as we sort of move forward. Yeah.
Yeah. No, absolutely. I think I definitely agree to these perspectives. And with that, I think we have the poll results out also. Definitely leaning towards the point, Pranti, you were mentioning consolidation, rationalizing in order to, support the efficiency and cost goals that we have, set for ourselves. So, definitely you read the mood of the audience, right? So, we just heard, everyone's perspectives and on how their, vendor portfolio might evolve. And, that ties perfectly into the next theme that we are going to discuss, which is around value-based buying. This is becoming really, really important for us because as enterprises lean into the entire reinvention space, the focus has to shift from buying effort or capacity to buying outcomes, right? Some of the outcomes on the insurance side, and Dinesh has already talked about, right? On the banking and financial services side, we have faster loan approvals, higher digital channel adoption, improved underwriting turnaround time, or enhanced, fraud detection accuracy, to name a few. But to make that shift, organizations first need to really simplify their portfolios, right? So if you have gotten 30, 50, 100 vendors working on the same process, it's nearly impossible to define or measure that value, on that consistently. So we are seeing three big movements. I would say one is simplifying the portfolio, measuring value on that consistently, and then structuring deals and governance around that value. And that's where portfolio rationalization, commercial model innovation, and stronger governance frameworks are all coming together to tie that story. And as this happens, enterprises are also moving towards, new operating models, whether, you call it a product aligned model, or, a platform first operating model, or a value stream, based one. Everyone has their own definition to it, but it's basically, moving to a model wherein we actually make these outcomes, sustainable. So Dinesh, maybe I'll bring you in here and ask this question, that what do you see as the biggest challenge in terms of this operating model shift, which is actually holding back enterprises from realizing this kind of a value, and definitely would want to learn more around how to solve for it.
Yeah, and I think this is also a good segue into the last section that we have. So I think, Priti, to your point, I think one of the biggest challenges which I see holding back BFSI enterprises would definitely be the kind of the silent approach to technology and operations. And as I said, right, we are going to talk more about in the next section that we have in the remaining time that we have. So if we take a step back and think about the way historically BFSI organization used to work, was that there used to be deeply embedded silos, functional silos, and these were designed to from a specialization and efficiency perspective, right? So these were designed keeping some of those things in mind. So what we've seen is that while this structure worked well in an era where processes were kind of well defined, very stable, and the expertise within each was paramount. However, as we are increasingly seeing that as the world becomes more data and AI driven, as these BFSI enterprises become more data driven, I think what we are seeing is that these silos which have been created for so long, they are restricting the agility part, right, and the decision making part. And I think we've talked about it, but I think to drive real value from data and AI, technology and operation can no longer function as separate worlds. They have to converge, right? I think what we wanted to also give a quick view is in terms of how have we seen this evolution happening over the last 4 or 5 decades, right? So, which is the 1980s, which was more about building reliable infrastructure. The 2000s was an era which was focused more of a global delivery and digitization. I think we also saw the explosion of cloud in the 2010s era, and I think what we have seen, post Chat GPT world and post 2022 is that AI-led systems of execution era, where I think what we are seeing is that intelligence and autonomy are being infused across every aspect of the BFSI enterprise, right? And this is enabling that fundamental shift from digitization to agentification, where different system act, learn, and optimize alongside human, right? So the way we are sort of positioning this is a human plus AI kind of an approach to deliver measurable business outcomes, right? Now I think we also wanted to spend some time on that on the last piece that we talked about, right, which is the systems of execution part, and how AI is sort of accelerating this convergence, right? So what we are seeing is that particularly from a BFSI enterprise perspective, enterprises are moving from systems of record and engagement towards a systems of execution kind of an approach, where processes are not just automated, because I think that is something that we have seen happening in the past as well, but we are seeing more and more autonomous processes, and a lot of autonomous processes using agents, right? These agents could be both human and AI agents, and those are directly getting embedded into your workflows, right? Be it from an insurance perspective or investment banking perspective. I think that shift is real happening, and I think agentic AI is kind of enabling that shift, right? So I think this is what we believe is the foundation of next generation operating model in BFSI, which is more agile, which are more integrated, and which are more intelligent by design, right? And if we sort of deep dive into some of these future ready operating model, this is a view that we have produced, right, which is the if we look at the future ready future operating model, I think it's integrated by design. This is where the business operations, IT, and technology teams work together as one connected ecosystem. You also have one transformation owner, he's accountable for some of those outcomes, and sort of ensuring the tight alignment between technology and operations, right? So I think, but the key message here and the key imperative is quite clear, that modernizing legacy IT and technology, infusing intelligent across the processes, and also looking at the some of those governance and risk related aspects, some of the aspect relating change management. I think those are becoming really important as you think about building an agile, a future proof ready operating model that can thrive among the different kind of disruptions that we're seeing in the market, and disruption we keep hearing. So I think, so thinking about some of those things, I think would really become important as we move into the future, right? And I think with this, I'll also maybe bring back Pranati into the picture, just to tie everything together for us, and maybe talk about the key implications from this entire session, and what are the key implications that we wanted to have for the audience and for BFSI enterprises in general. Yeah, Pranati.
Yeah, thanks, Dinesh. But just wanted to also bring out that there are a few questions that our listeners have shared here. I can see Tyler has asked this question to us. What needs to, and very interesting questions. Again, what needs to change from a contracting perspective if you start reimagining or your RFPs to include AI? Again, do the same SLAs apply? What about the data privacy concerns? That's a very beautiful question. Again, if we start reimagining RFPs to include AI, our contractual models, they definitely need to evolve across not just one or two places, but several fronts. SLAs need to go beyond the traditional uptime, and look at more response metrics to include, AI accuracy, explainability, model drift controls. Data privacy clauses, again, must be very explicitly addressed, across, what is the model training, ownership, the use of enterprise data. And RFP scope, it should definitely extend beyond a lot of app development to cover AI enabled services. In a nutshell, to again, to sort of make this shift, we need to redefine SLAs to include specific areas around AI, such as accuracy, transparency, and some of these performance metrics. We need to strengthen the data privacy terms around model training, ownership, and usage. And again, we need to include a lot of AI governance and accountability frameworks. I think Kriti and Dinesh were alluding to that. When they're talking about our whole AI based reinvention story. You need to also expand RFP scope beyond app development to to look at ops platforms as well. Again, building flexibility for continuous model upgrades and compliance alignment is also going to be very, very crucial. With that, again, quickly moving on to this, the key takeaways that and the messages we want to leave you with. Uh, One message that we definitely want to leave you with is that enterprises need to rethink how they are funding, structuring, and delivering value from technology investments. So again, that old way of budgeting in TARS, and I think Dinesh was alluding to, how it's still the TNM model, which is more prevalent. So again, your old ways of budgeting in TARS, outsourcing for just scale, measuring success by just delivery milestones, that's becoming more and more obsolete as we move along. To compete in an AI first world, continuously disrupted world rather, we've seen financial services and insurance institution, they are sort of redesigning their spend operating models around connected outcome driven value streams. That means you need to reframe some of these spend categories itself. You need to build a lot of cross functional models, such as agent ops for that matter. Even integrating some of your services, tech, and data with shared KPIs. It also means engaging partners differently, not just to just execute, but to co-create with you. Success will not come from just controlling the cost input, but how do you orchestrate that ecosystem? And it's an opportunity for enterprises. Again, how do you orchestrate, bring that out of the ecosystem where outcomes are sort of jointly owned, innovation is rewarded, and agility is built into the very core definition of how you're operating. That's how we've seen a lot of these some of the leading financial services and insurance firm deliver transformation. Again, and it's not happening in the we are already seeing that movement happen, that shift happen in the mindsets itself, and in their thinking itself. Kriti, Dinesh, anything you want to add here? Otherwise, I think we can open the floor for more questions.
Yeah, I think just to sort of summarize, right, as we start getting some of these questions, I think if I have to give one key takeaway for this session, I would say there's a lot of change which is happening, right, from a BFSI enterprise perspective. I think every day we are seeing some developments from an AI perspective, right? So I think what we see from a implication perspective is also just rethinking some of the traditional approach which organization used to take. I think as you go into the future, as you look to build your strategy for 2026 and beyond, I think it's important to just consider some of these things we talked about, right? Which is how are you thinking about your portfolio consolidation? How are you thinking about infusing AI into some of those RFP and some of those sourcing conversation? I think that will increasingly become important as you move into 2026 and beyond as well. Yeah, so those would be my key takeaways and the key messages for this audience.
Yeah, and I see we have another question in the chat coming from Radhika, that how are you seeing this when it comes to adoption? Are client organizations ready to have such AI augmented solutions? Right. So I think from my experience currently, or in the recent past, I have been involved in a couple of uh, projects, client situations wherein we were helping, build the RFP for a BFS enterprise. And I think that AI augmentation in the RFP itself is what clients are working on and are really going after. So how do they change their RFP? How do they include questions for service providers and suppliers that, hey, give me an AI augmented pod, what will be the value for it, right? Give me an AI aware pod. How much productivity benefit will you be able to provide me if I have X number of AI augmented pods versus y number of AI multiplier pods? So these kind of questions you will start seeing in RFPs that you will start getting from BFS enterprises. And it's not just about the pod models and the pricing and the rate cards being changed, but also from a capability point of view, there are multiple such layering of AI happening in the RFPs, wherein from a talent perspective, IP perspective, partnership perspective, your investments perspective, how are you bringing in that AI, embedding in the service delivery? So, short answer, yes, BFS enterprises are all, open towards this, and we are, really seeing the front runners actually, making, going and making a change in their process. Pranati, Dinesh, anything you would like to add around this basis your experiences?
Yeah. Yeah, again, Kriti, you gave the, that aggressive point of view, forward-looking view. But again, you may also see at the same time that most organizations are still using a lot of traditional RFPs designed to, sort of just fixing their requirements and not that AI-driven co-creation. Again, AI reinvention, as Dinesh was also alluding to, that needs RFP that focus on a lot of experimentation around data, a lot of data collaboration, outcome based value, and client readiness at the moment. What we are seeing, and I'm going back to what Kriti said, it's the early stages, but yes, the readiness is, we were seeing signs of that readiness sort of evolving, more still in that AI aware zone or AI enabling, which Kriti was alluding to. But yes, gradually it is going to be AI executing, and that adoption itself is growing and it's moving at a very, very fast pace. Dinesh, anything that feel free to add your perspectives. Anything that you believe is contrary to what Kriti and I mentioned.
No, I think absolutely resonate with some of the thoughts, that you mentioned, Kriti and Pranati. I think I would probably, talk about from an insurance world, because that is where I come from. So I think from an insurance perspective, at least, right, we are seeing a lot of investments, from some of these, from some of these insurance firms across some of the things that we mentioned across the during this last hour or so, right? I think increasingly some of those conversations that we are having with some of our insurance clients are also revolving around that process optimization kind of a construct, right? Which is we are working with a lot of providers, but they also want to understand, that what's the overall scope of outsourcing, right? So I can talk about a recent engagement that we did for a life insurer in the US. So this is a leading US based life insurance company, and what they wanted to do was and how we supported them is, we looked at their the entire operations, right, across the value chain, which is sales and distribution, underwriting, claims, policy servicing. And what they wanted to understand is, based on how they're working with their current suppliers, what is the overall opportunity, right, in terms of outsourcing. They also wanted to understand, what is the potential from an automation perspective, and how they can work with some of their suppliers to drive some of their automation initiatives, right? So, and this is something that's a consistent theme that we are seeing across all our engagement, right? So another engagement that we did for one of our PNC clients was again focused around this same point, right, which is how do we drive process optimization, how do we bring in more automation, and how exactly do we leverage our suppliers for the same, right? So I think definitely a big push is something that we are seeing, at least from an insurance perspective, or at least based on the conversation that I have been having with some of our insurance clients. Yeah.
Yeah, I think we are almost at the top of the hour. Yeah. Let's pause for if there are any final questions. Otherwise, we can close the discussion for today. Yeah. That was an awkward silence, but yes, happy to answer any of your questions, even at a later stage. You have our coordinates here. Feel free to reach out to members, to us, or members of our team, and we will be happy to speak to you and exchange our perspectives. Thank you for your time today. Thank you, everyone, and have a great rest of the day, rest of the evening. Bye bye.
Thanks,
Thank you,
everyone.
everyone, for
Bye.
joining in.